In this week's episode of the Stock Scores Market Minutes, we will ask the question, will the stock market crash? And I'll try to provide you some answers on how to know when. Then I'll do my regular weekly market analysis. We'll do some Stock Scores market scans in search of opportunity and look at the trade of the week on CTRM. All right, so will the stock market crash? Eventually, yes, it always does. And it always seems to come right back up again. The question really is, when will it crash? And what we have to keep in mind is that there are different motivations for different investors in the market, and ultimately they may have a different idea than you have. And therefore we need a systematic approach to identify when the market will crash. There are a lot of investors expecting another stock market crash. We have the negative headlines that we hear every day. Really strong gains year to date make people think that we must pull back soon. There's also that memory of the last market correction that we had in November and December, and the sort of PTSD that comes from the pain that many investors felt through that correction. We should never trade for a crash until there is a sign of weakness. We have to be willing to miss out on the top in favor of sticking with the trend as long as it is in place. Now, as I said, what makes sense to you or I may not matter to the overall market. All that really matters is whether the buyers or the sellers are in control. And we can tell by using something very simple, the trend line. So trend lines show us who's in control. If there is an upward trend, that means the bottoms are rising on the chart, and that is a sign of investor optimism, because every time there is weakness, the buyers step in and defend it at a higher level than they had previously. So right now, if this trend line were broken, then it's likely we will move down to this trend line. If that trend line is broken, we will then probably move down to the next trend line, which I will show you on the daily chart. The point is, if you just use your trend lines and stick with the trend as long as those trend lines are in place for the type of trader you are, you will, for the most part, stick with the trend and be able to get out when the trend is broken. Now, if I'm a swing trader, I'm going to be using this shorter term trend, or maybe this trend. If I'm a longer term trader, I'm going to use the trend line on the daily chart. And if I'm a really longer term trader, I'll use the trend line on the weekly chart. And you just have to pick which type of investor or trader you are and define the trend line. Here's the daily chart. All I've done is drawn a trend line across the inflection point bottoms. And if I'm trading where my holding period is typically weeks or months, then I'll get worried if that trend line is broken, because it's likely that we're going to fall lower. Now, one of the key things that we have to think about is when markets rally into resistance, they usually get stuck at resistance. And one of the reasons that I think caution is warranted right now is because we are nearing that critical point of potential weakness where the market will rally up to that level and perhaps get stuck and roll over and then finally break the trend line. Hasn't happened yet. I don't think there's any reason for concern until it does, but we should never take our eyes off these charts, because eventually we will get a correction. All right, so let's continue with that chart of the S&P and look at the US markets. This, of course, is the same chart we were just looking at, and all I really want to point out here is the bottoms are rising, and therefore the buyers are in control. Looking at the longer term weekly chart, there's the point I was making. We have that longer term resistance there, and at that point I expect we will see some weakness. Now think about what happened the last time we hit some highs. So there was the previous highs to here, and I can draw a trend line across. I drew that a little bit off, a little lower. Well, when the market rallied up into that resistance level from here, it got stuck. It went sideways for 4 or 5 weeks, and then it rolled over, started breaking this upward trend line, rolled over, and we had that big move to the downside where we saw pretty significant losses that, hurt a lot of people if they didn't sell when the trend was broken. A lot of people were selling down here when the trend had been broken months earlier, at least weeks earlier. And we don't want to wait for the panic. We want to exit when those trend lines first get broken. And if you stick with me here in the Market Minutes video every week, I will show you if and when that is happening. Looking at the Russell 2000, which of course is our shorter or smaller cap stocks. This is a daily chart. We've got some resistance right here. We have had a pretty good last few weeks with, a little bit of strength, but the small caps are really underperforming the large caps. And I'm not sure why that is, but just keep that in mind. They don't have as much downside, but they also don't have the momentum that the large caps have. Ultimately, I think if we can break out of this range, we should move up to this resistance level. We just need to get some buyer interest coming back to the small caps. Volume is relatively low and dropping off, so let's keep an eye on that. On to the Canadian markets, starting off with the TSX 60, with some strength in the energy sector, which we talked about last week. We are getting finally some strength in the Canadian energy stocks, and that's lifting the TSX to new highs. We've had a nice upward trend in place for the last few weeks. It is a bullish market. It also recently broke out to new highs on the weekly chart. I think we closed just above that level on the end of the week last week. I think that this market is due for a little bit of a pullback simply because of one of my favorite rules. When markets rally into resistance, they usually get stuck at resistance. We've had this big move up. Yes, we closed just above this, but we're probably going to see some sideways action in the next few weeks and perhaps even some selling pressure. I do think that those Canadian energy stocks had a really good week last week, and they probably need to have a little bit of profit taking in the next week or two. TSX Venture, which of course is the microcap stocks in Canada, really stuck in a sideways trading range. There is some optimism there. We can see that because the bottoms are rising, but I'm a little worried about that falling top, and so we'll have to keep an eye on whether that 620 level on the TSX Venture, the symbol $JX, if that gets broken, we may see some profit taking. Hasn't happened yet. I just want to give you something to watch for. On to the currency market. Let's take a look at the US dollar, which has been pretty strong over the last year. We've got optimism. The buyers are in control. We can see that with rising bottoms on the chart. And we are hitting this resistance level. We've stalled there for a few weeks. Feels to me like ultimately we're going to break out through that. Hasn't happened yet. That's what you want to watch for. And if it does happen, then the US dollar probably headed up to that level. I would not get worried about weakness in the US dollar until that upward trend line gets violated. Canadian dollar, well, of course, with the strength in the US dollar, the Canadian dollar suffers a little bit. Usually the Canadian dollar does well when oil prices go higher, but of course there's a lot of issues around the Canadian oil market in terms of getting the oil to the market with pipelines and that sort of thing. And I think that's really dragging down the Canadian dollar despite the fact that there is strength in oil. We do have a rising bottom here, which is the first step in a trend reversal. And if we can break the downward trend line, then I think the weakness in the Canadian dollar that has been in place for almost 2 years may end. But it hasn't happened yet. Again, just something to watch for. On to interest rates. Looking at the US bond market, we had some real upward price action a few weeks ago. Got into close to resistance. Now we're pulling back. I think we'll probably bounce back in the next week or two and try to make that stab toward the 128 level on the TLT. And that would mean lower interest rates. For now, we're seeing a little bit of a pullback in bond prices and a slight uptick in interest rates as a result. Now, the commodities area, gold, I'm a little worried about gold. It had a pretty good, last 10 months or so, 8 months. And then we've started to build some falling tops. You can see this top here is higher than this one. And so we've got that falling top cycle. The upward trend line on the daily was broken here. And we just keep building falling tops. And so if we break down through that 121 level on the GLD, I think gold goes lower. And of course, that will probably happen if the US dollar can break through resistance because they tend to be inversely correlated. Oil, despite the strength in the US dollar, continues to move up. It's doing so in relatively light volume. Doesn't feel like there's a real rush to buy oil and bid it higher. It's perhaps just a reaction to a heavy sell-off, and now maybe we're getting to normalized rates. But for now, bullish market. I think it's a bit overbought and due for a pullback. We'll see if that comes soon. Again, no sign of it, just something to watch for. And finally, my fear chart. We always look at the VXXB, and you can see that fear is at a real low. That worries me a little bit. I think that when fear gets that low, it's a complacency. And as that stock market rallies into resistance, we may get some profit taking in stocks. That would cause a pullback in stocks and perhaps an uptick in fear. No reason to buy the VXXB right now, but something to keep an eye on because if it does uptick, we can get these big moves if the market does correct. So this is really the only reason to own VXXB. You don't want to own it most of the time. You only want to own it when there's some real strong selling pressure in stocks. All right, so my ratings then. US stocks, neutral long term. I'm a little concerned about the resistance on the daily chart. Bullish short term. Canadian stocks, same thing, neutral long term, bullish short term. We've rallied into the resistance at all-time highs where we should stall. Gold, neutral long term, building a bearish pattern short term. I worry about a breakdown there. Oil, bullish in both time frames, no sign of weakness, but I want you to watch that closely as we are due for a little bit of a pullback. Stocks continue to march higher toward resistance with really no sign of weakness, but that tells me that investors are feeling a little bit complacent, so we want to watch for a break of a trend line to signal a pullback. Oil is overbought, but there's no sign of weakness. Gold building the short-term pessimism, and a breakdown may be near. Hasn't happened yet. Keep an eye on it. All right, let's jump into the stockscores.com website and run a market scan. This week I'm going to run the abnormal break scan on the US market. We could do it on the Canadian market as well, but I thought I'd run it on the US side. And let's just see what it finds. 36 stocks, it filtered through 7,000 stocks and in an instant found the 36 that made some abnormal price moves on Friday. This APHB, it's a real penny stock, but it's got some life. I would say it's got a 50 to 60% chance of moving higher, so it's a little bit speculative, but with good risk management, might be something worth considering. I'll just cycle through these. This is another one that had some life on Friday. Unfortunately, the chart is so skewed because of that big move that it suffered down. Let's take a look at the 1 month or the 1 month intraday chart. There you can see the buying pressure that came into the stock on Friday. We were day trading this stock in the Active Live webinar, and nice to see that it rallied into the close, and that's one of the reasons I like it. Again, highly speculative, but something to consider. Moving along, KTOV closed below its open on Friday. I don't like that. I'll just cycle through these as fast as I can here, looking for the right kinds of chart patterns. Callon Petroleum, CPE, not bad. Wish it had a little bit stronger volume, but it does look like there's some optimism coming into the stock. I'd give that a 6 out of 10. This is the natural gas bull ETF, or I guess it's an ETN, where it's trying to break out of this lengthy range. We may see some strength coming into natural gas near term. That would help some of those energy stocks that have a focus on nat gas, and something to keep an eye on there. If we can see a little more life breaking out, maybe through $9, $8.50 even on this chart, we could see a little bit of a rally in nat gas. And of course, nowadays you can trade these commodities through the ETFs and ETNs. You don't have to go into the commodities market to do so. It makes it a little bit easier. WPX Energy, pretty good chart. Give that a 6 out of 10. You can see it's building some optimism, breaking out through some resistance. Looks like it's starting to make a turnaround. And Parsley Energy, I like this one probably the best of any chart we've looked at today. Really strong volume, breaking out of a lengthy sideways pattern, and good price action. I think the stock more likely to go towards the $26 to $30 level than it is to go toward 17, and so that's one to keep an eye on. All right, so let's look at our trade of the week, and this was a stock that we day traded again in the Active Live webinar on Friday. It made my stock scores action candle right there. That was the first one that qualified anyway. We have some additional rules around this indicator. And then it went for a nice pop. Now it was halted a few times because of course there are circuit breakers that exist on the market in the US, and those circuit breakers cause these stocks to sometimes get halted for 5 minutes, perhaps even more, when there is enough volatility. And that's why there is that big gap there during the day. So this stock moved up very quickly. To take $100 of risk, because the stock was so volatile, $100 of risk only required 260 shares, which was $1,474 in capital. You should be able to margin this stock because it's over that $3 or $5 threshold. And therefore, for only $491, you could control that 260 shares, which meant, by the way, there was an exit signal using one of my exit strategies right there where I've circled. And that meant a 3.2 RR gain, or a $320, this should not say loss, it should say gain. I had a loss in my trade last week, that's why that's there. So that was a $320 gain on a $491 capital outlay, a 65% return, for really a hold period that was only a couple of hours. And that's a really nice trade for those who like to take advantage of these lower price stocks that are not so capital intensive. Now, if you like to take more risk, perhaps you like to take $1,000 of risk a trade, well, then this becomes 2,600 shares. This becomes $4,910 in capital, and this becomes a $3,200 gain. That's how we use this approach with risk reward lines and our risk tolerance. Well, that has been the Stock Scorers Market Minutes for April 15th, 2019. Hope that you've enjoyed it. We've got some upcoming events on stockscores.com that you can register for, some live events in Calgary and Vancouver, as well as webinars. Just go to the upcoming events area at stockscores.com. As always, please subscribe to the channel, click on that like button, leave a comment if you have one, and most importantly, trade well.